Hello, welcome in everyone. How we doing on this Sunday? Sup to the fellas in the chat. Welcome in live. To those of you watching on YouTube in the future, please throw a like, throw a subscribe button. We got all the juice coming all 2025, so make sure to be here, be part of the community, watch the videos, take some notes while you're here, and let's get started today. So today I have something super important that I've been working on, and I'm glad that I can finally share it with you all. It's been something I've been working on over the past couple weeks. It is the Ultimate Personal Finance Guide. I will have something coming out in the next week where you guys will be able to interact and be able to read what I've been working on. But today I have a high-level overview, 10 chapters of what I've been working on. This is just a high-level overview, but we'll talk through it. You guys will be able to see what I've been working on. So it'll be ready to go this week. So I'm excited to share it all with you. You guys will be able to put your own numbers into an Excel sheet and be able to read the ultimate guide here that we're going to go over today. So it's going to be super fun. So welcome in everyone. I'm getting notifications that frames are dropping, which I don't understand. Streamlabs just don't want us to stream properly. We're having technical difficulties with Streamlabs, so I can't wait to get off this platform this week. But without further ado, I want to jump in to what I've been working on. I want you guys to read. This is the overview. So glad I could finally share it. Let's get going. So this is the ultimate finance guide for your personal self. So this is just going to be, all right, good. Looks good on your end. So this is going to be the personal finance guide. I'm going to run through each chapter that I've been reading and writing about, and it's going to be you guys are going to be able to go through this guide in a couple of days. So I'm going to talk through it, everything you need to know, and then the Excel sheet will be available, which is going to have all this kind of stuff built into it, putting your own personal finances into it, and we could go from there. So chapter 1, Introduction to Personal Finance, the importance of managing your finances early, key components in budgeting, saving, investing, and managing your debt, an overview of how this guide will help build healthy financial habits. So this is everything you can expect in the first chapter. It's going to give you tips on saving, investing, and managing debt. Obviously, the saving is going to be crypto related, and investing is going to be crypto related, how you should structure your investing and everything like that. So this is just a brief overview of everything you can expect there. So chapter 2, creating a monthly budget, a step-by-step, sorry, my camera's probably blocking some of this stuff, so I will scroll it for you so you can see. A step-by-step process for building a budget using the numbers template that I talked about before that will be available to you guys this week. Importance of tracking every dollar. If you don't know where your money's going or where it's coming from and you're just spending money, you're like, okay, where is this money going? It's just going to be out the window and you're never going to realize where it's gone. So keeping track of your spending is so important when you're trying to build wealth and you're trying to save money. Managing fixed versus variable expenses. So obviously your fixed expense is going to be something that you pay monthly. That could be your rent, that could be your car payment, that could be insurance, that could be whatever it is, something that it's coming up every month. I use different softwares to build out presentations, to build out pictures and editing and stuff like that. So CapCut is a fixed expense for me. Canva is a fixed expense for me, and things like that. A variable expense will be more if you're running a business. So say you're selling products online, e-commerce, which I also do. A variable expense for me might be if I sell 20 products that month, variable 20 products times $10 it costs to buy that product. That's going to be $200 a month. If I have a good month and I sell 400 products, that's going to be a lot more money because it's 400 products as opposed to 20. So if things change like that, that's a variable expense, and we'll talk about that in your life. It might be, you're driving further to work now and you have to spend more money on gas, or vice versa. You're driving shorter to work, you might spend less on gas that month. So keeping track of what is a variable expense for you and a fixed expense month over month will give you a better idea of where your money's going. Then we have the 50-30-20 rule. 50% of your needs, 20% or 30% things you want, and then 20% is your savings. So again, under the needs, it could be your rent, groceries, anything you need to survive, clothes, maybe not clothes, that might fall under the wants category, but things you need to survive. So you obviously need food, you need your rent, house under your head. And then 30% wants, that's going to be things like maybe you want a new webcam for your business, you want a new computer, putting money away for things that you want. And then obviously 20% savings, that's going to be investing in crypto, putting money away for a side hustle, a bank account, just opening up a new bank account, putting money in there each month and saving. That is going to be a great step for you to build a business in the future, as long as you have a cash pile of what you're doing. But that is the formula for how you should be spending your money, the 50-30-20 rule. Chapter 3, understanding and managing debt. Different types of debt, good versus bad. This is super important because a lot of people hear debt and they get scared. Oh, I don't want to be in debt. I don't want to be in debt. Okay, yeah, that's true. You don't want to be in bad debt. You want to be in good debt. Good debt could be something that makes you money. If you want to buy an Airbnb rental property and put that up for sale every month to people, if you're in a vacation town, that's good debt. You're going to take a loan out on a house, and you're going to put that out on Airbnb and hopefully make money every month with that. So that is good debt. Bad debt might be credit card debt, paying 25% APR on a credit card balance of $5,000. That's a couple $100 every month that you're going to have to pay interest on. So that's bad debt. And I'm going to talk about things like that. And in the numbers template that I'm going to be building is using a debt payroll plan template to track your progress. So when you want to pay things off and you have interest, you have a plan of how you're going to, if you have 3 credit cards that need to be paid off, keeping track of your interest, which ones have the highest interest that you could pay off, which ones have the lowest interest that you could let ride out a little further. You want to pay off that high interest first, so that way you're not spending more money than you have to be. So a little plan of how to pay off your debt is super friendly to anyone who has debt, and that's what I want to build for you guys. So chapter 4, building an emergency fund. This is super important. A lot of people don't do this, especially if you're trying to get out of the 9-to-5, or you have something that comes up with family. You want to have some money stored away so that you can make a change of plans in your life. So if you could, switch to a plan B, if plan A isn't going exactly how you planned, if something comes up, you want to make sure you have an emergency fund ready to go. So that's why an emergency fund is critical. How much to save and where to store it. I usually recommend 6 months of expenses. So that's if your rent is $1,000 a month, that's $6,000 plus. If you have a car payment, that's $500 a month. So it could add up quickly. So you want to make sure you want to have the proper amount saved. If anything comes up, if you have to quit your job, if you have to travel because family's sick, whatever it is, whatever your situation might be, you want to make sure you have an emergency fund ready to go. And this is also going to be a step-by-step instructions into tracking your savings in this number sheet that I'm going to provide this week. So this week right now, I'm obviously going through the outline of what's going to be in here, but next week on Sunday, I want to walk through the guide step by step so we could all take a look at it together. So chapter 5, introduction to saving and investing. The differences between just saving money and investing money, super important. High yield savings accounts, bonds, stock market, and this will also fall under crypto as well. Your risk tolerance and how to start investing. When you first start off investing, you want to have safe investments, things that are going to make you money in the long run. You don't want to gamble. So we'll talk about that. Using the investment portfolio template to manage and track your investments. Again, super important to see how your money's growing, where your money's at, and how it's working for you. You just have to see these things, because you could go into a crypto portfolio and you could see it's all there, but if you're not tracking how much money you're making, unrealized gains, you don't know when to sell. You don't know how much money you're making currently. You could be down and then you could sell and then you lose money. So it's important to see where your investments are, how much you're up, and your unrealized gains and things like that. So this is just another one, chapter 6 here, that I wanted to add in because It's super important. We just added a FICO score class inside the Taylor's Code. So if you're in the Taylor's Code, you could already get a jump on credit scores. Credit scores are super important. Credit score is how you are able to grow wealth in the modern age, because if you think about every country, every company, they take out debt to buy things, and then you have to use that debt wisely to be able to make you more money. So how a credit score works is super important. If you have good credit, you could buy almost anything in this world. But if you have bad credit, you probably can't buy anything in this world. That's how the system is set up, because if you have a great credit score but you don't have a lot of money, you could get a loan for a new car. You could get a new credit card that's a $50,000 balance. You might not have the money, but if your credit score is good, you could get those funds available. But on the other hand, if you have a little bit of cash but your credit score is shit, they're not going to give you the new car. Even though you do have a little bit of money, you have to put all that money down to buy the car, as opposed to just putting maybe 10% down on a car. You'll have to put 50% down because you have the cash, and you have to get a smaller loan on the car because your credit score isn't good. So it's super important to build your credit. So I'm going to put together a step-by-step guide to improving your credit score. And like I said, we have that class in the Taylor's Code. And free tools to monitor your score regularly. So these will be different websites. If you, I bank with Wells Fargo. Wells Fargo has a tool that I use that they provide for free. So I could go in and check my FICO score, check my credit score. It shows me what I need to work on to raise my score. So paying off certain things, like I have an American Express card that I kind of run most of my finances through. So making sure that's paid off properly each month is going to give me the best opportunity to raise my score. So I know we have some viewers in the chat as well. If you have any questions as I'm going through here, shoot those out. But I want to do a little Q&A after I finish running through the outline so we could talk more about it. So managing taxes as a young adult. So this is a super important question, because once you get your first job and you start really understanding what's going on in the world, taxes are either going to be your worst nightmare, or if you're planned and ready for it, it could make you a little bit more money. So having a good tax plan is super important. Me and Priyamo talk about this a lot. Invested in crypto, you obviously want to keep the most amount of money in your pocket and not pay super high amounts of taxes. So like if you live in California, you're obviously going to pay way more taxes than if you live in a state-friendly tax bracket like Texas or Tennessee or Florida, where they have 0% state taxes. You're going to save a little bit of money there on your income. So the basics of income tax, tax brackets, and filing taxes, deductions and credits young adults can take advantage of. So there's different deductions related to electric vehicles. There's deductions related to first-time home buyers. You pay interest on a loan, you could get that deducted from your taxes. So there's all different little nuances that you could save a little bit of money year over year on your income taxes. So if you have a 9-to-5 job, you'll obviously be a W-2 employee. You could also be a 1099 employee if you're working for another company. If you do sales, I know a lot of people in sales are 1099 employees. Or if you have your own business, you're going to be taxed at a corporate tax rate for some things, depending on how your business is structured. But it's important to understand where you are in tax brackets. If you're making good money, you really have to understand this. If you're not making a lot of money yet, don't really worry too much about this, because you're not making enough money to be taxed anyway. But it's important to understand as you want to grow in business. So how to organize tax documents throughout the year for easy filing. This, I think I'm going to touch more on actually keeping track of your expenses if you're an entrepreneur, because there's a lot of things that you do as an entrepreneur that could be tax deducted. And if you don't have to pay taxes on certain things, that's great. So planning for major life expenses. This could go two different ways. You could think of this as an emergency expense, but as people get older, you want to do things. You have a girlfriend, you want to buy a house, you guys want to have kids. These are things you got to plan for. It just happen and you buy your dream house. You got to plan to have your dream house. You got to plan to have 3 kids that, need cribs and need food and need diapers, So this stuff is important. This is stuff you got to learn. So saving for big expenses, buying a car, a home, planning for a wedding, whatever it is. Long-term financial planning using the savings goal tracker that I'm going to build for you guys in this number sheet. So the importance is the importance of future-proofing your finances. Insurance. We have a ton of insurance professionals inside the Taylor's Code. Reach out to Priamo if you want to learn more about insurance and how you could make money taking out insurance on yourself, family, whatever it is. There's tons of tools in insurance that people use to grow wealth over long periods of time. That's taking loans back out of your insurance. There's so many different tools you could use to save money and grow money in insurance. So maximizing your income and your side hustles. How to grow income through side jobs or freelance work. That is what we do here in the Taylor's Code. This is pretty much a side business for a lot of people. This is people who want to get into side hustles and start making that side income. You're already in the right place. This is where you could build that side hustle to a $10,000 a month, $20,000 a month income, and you could start building your income out. And that's what we talk about. Then you could start investing and you could start saving money once you drive an income. So having an income is the most important thing if you want to do any of this side hustle stuff, So you want to maximize your income. So passive income strategies, stocks, real estate, content creation. I wouldn't say content creation is very much passive, but if you have one video that you build one time and that video gets 1 million views over 2 years, it's kind of passive because you put the work in one time and then you're receiving those gains over a long period of time. So that's the goal with passive income, is you want to do something one time and then you see gains from that over a long period of time. And I would say the same with real estate. Real estate's a lot of work, don't get me wrong. You could do something in real estate and the water pipe could bust and it could fuck the whole house up. That's just how it works. But if you do something right one time, like I was saying before, Airbnb, if you buy a property, you fix it up nice, and then you list it on Airbnb over the course of 5 years, as long as you set everything up correctly from an expense standpoint, paying house cleaners, paying a pool boy to clean the pool, and keeping track of your expenses, it could be pretty passive. You might not have to do that much work as long as your house stays clean and stays not broken. So that could be a very good opportunity too once you have enough income. And then the final one here is using budgeting tools to make income from multiple streams. So that is my goal right now, obviously, to make money in e-commerce, make money in crypto, make money in content creation, make money in mentorships. So once you have all these revenue streams coming in from all different directions, you got to be able to keep track of it, and you have to know how much money you're making. One, for tax purposes, because Uncle Sam wants his money, he's gonna take a tax cut out of your income. That's just how it works. So being able to track your income properly is gonna benefit you in the long run, paying less taxes because you know where your money's going. You can keep track of expenses related to each side hustle. So super, super important to keep track of all your income streams. And budgeting too, because you don't want to spend too much money related to content creation when it's not making you any money. Maybe you want to put more of your income into, for me, my e-com side of the business, because that makes more money than my content creation does right now. So if I'm putting too much money into content creation and it's not generating me any revenue, well, those funds could be used for a different income stream. So e-commerce, maybe if I'm only putting $500 a month into my e-commerce business and I'm putting $500 into YouTube, but YouTube's not making me any money, I take that $500 out of YouTube, or maybe not all of it, maybe I'll take half of it, $250, add that $250 to my e-commerce, and maybe that $250 that I put into e-commerce can generate me a little more revenue from what I'm already generating. So just being cognitive of where you're putting your money is super important. That's what we're here to do, right? We're here to make more money and we're here to learn. So this is what you guys got to learn. So tracking your net worth and long-term wealth building. So this is very high level stuff here. Obviously, I know a lot of people are making a ton of money right now and maybe in debt, so you're not worried about your net worth calculation. But as you start making income and you start diversifying your portfolio into real estate, into crypto, into stocks, into all these other things, and you have a YouTube page that generates you $10,000 a month straight to your bank account, you're gonna be like, okay, how much am I worth? So I'm gonna give you guys a tool for how to calculate your net worth, and you might be able to see like, wow, I'm worth $100,000, or I'm worth a little more than I thought. I'm worth $500,000 because I bought this house when I was 22. My parents helped me pay for it. Now the house is halfway paid off. I have equity in the house, and you're like, wow, I'm worth almost $500,000. Suddenly that $5,000 worth of credit card debt isn't important anymore because you have a real asset in a house that you could sell at any time, pay off your credit card, pay off your debt. So these are things that will help you in the long run, put you at ease, because a lot of people tend to see dollars on a screen and get stressed out about it. Like I said, credit card is a big one. The United States is huge into credit card debt right now. So sometimes people get super stressed out about that. But when you own assets, you could sell assets and you could get cash for them. So if you have a car, if you have a house, if you have this stuff, it could kind of put your mind at ease that, credit card debt is temporary. So that's how I like to look at things. So that is the recap of what I'm going to be building out the remainder of this week. I'm going to have a video coming out, I think on Tuesday or Wednesday, going over the tools, the numbers tool, kind of in this setting. I'll be talking through, the formulas I'm using and just how the budget sheet is going to work out itself. So I'm excited to show you guys that. And, I'm not exactly sure how I'm going to do it from a payment perspective, because I do want to get this in the hands of the people. But this is a very good tool that I put a lot of time and effort into. So we're going to see how much it's going to cost. So we'll see. We'll talk about that at a future date. But I do want to make a video on it and show you guys that, it's going to be a valuable tool. And this is stuff you're going to use. And once the ebook is created too with this, so these are the outlying chapters, it's going to have a lot more information of my day-to-day stuff and how I think you should build out your budgets and your, understanding the debt and everything like that. So it's going to be a really good tool, and I'm excited that it's almost done for you guys. So that's all I had from the overview perspective. If we have any questions in the chat related to this, shoot them off. I'll answer them. But other than that, I was just going to chat more through these different chapters, pop back and forth. But super, super cool stuff coming in. I'm excited you guys could share it. This will be exclusively in the Taylor's Code at first. And then, we'll go out broad with it once we get some people who use it. And we'll see. We'll run some tests on the number sheet. So hopefully that, people use it and it's valuable to them. Yeah, it's a no-brainer. I mean, yeah, it's going to be a free tool for you to understand your wealth, understand your income, understand your expenses. That is the biggest problem these days, is that people do not understand where their money is going. So to be able to visualize it and see it, other than a bank statement, because I know bank statements could get a little scary looking sometimes, related to your business is even more important, because you could see what is making you money, reinvesting and things like that. So that is it for now. I hope you guys find this valuable, and I'll keep you guys updated as this come out. How important is it for people to track their finances? It's super important. Think about it in terms of a sports team. If the sports teams didn't have any plays to call and they went in there and freeballed it every game just off the top of their head, how many games do you think they're going to win? They're not going to win very many games just thinking about, how to do it on the fly. You got to have a plan. It's got to be written out. You got to understand what's going on. So to have a budget sheet and to see how much money you're bringing in and then where that money goes. Okay, it goes to rent. Okay, it goes to my car. Okay, it goes to insurance. Okay, it goes to groceries. Okay, it goes to dining out. Okay, it goes to coffees every day. Like $5 coffee every day adds up over a month. That could be $200. If you're going to Starbucks paying $6 a coffee, it could add up pretty quick. So being able to see where dollars are tracked are super important and super to your finances, because my strategy for investing in crypto would say, is I'm just trying to accumulate coins at a cheaper price. So when I see coins dipping down like they have been over the past week or two, it's a good time to put whatever you can. Obviously, you don't want to stress yourself out and put $100 in when you don't have enough money to buy groceries this week. Maybe put $20 in and buy $20 worth of coins this week. And then you get paid next week and you go, okay, I bought groceries last week. I put $20 into crypto and this week I got paid. Like now I have extra money. So now you could put another $100 in when you get paid, as opposed to putting money in when you don't get stressed out about it, because you shouldn't invest when you're stressed out about where the money's going. And I think I wanted to touch on this one too, building long-term wealth through investing, saving, and asset management. Because this is the key right here. This is what we're all here to do. Oh, sorry, you guys can't see that. This is what we're all here to do, is build long-term wealth for our families, right? For us, for families in the future. Time goes quick. So if you're not thinking about where you're going to be at in 2 years, in 5 years, in 10 years, when are you going to start thinking about it? Because it's coming up quicker than you realize. So once you get that income stream that makes you enough money, whether that's side hustles, your main job, sales, whatever it is, however you make money, that is going to be the starting point for your budget sheet. Okay, this much money comes in each month. Now, where does that money go? Okay, this money goes to expenses. I need to live somewhere, rent. I need to get to work, car. I need insurance on a car. Okay, now it's okay. So now that I paid for my expenses, I could eat, I could live. Now, where does this money go? Okay, well, I just opened up a new e-com store. So I pay $30 a month for Shopify. I buy products when they come in, variable expense, like we talked about before. And this is how you build wealth. And then at the end of the month, you see how much expense you paid. And now you're like, okay, this is my savings left over. So where am I going to put this now? Do you want to save for investment? You want to put it into the S&P 500 and get 7% a year and not lose it because it's, not a very high risk? Or do you want to go a little more risky? Do you want to buy Brett? Do you want to risk, maybe possibly losing 10% over the next couple months? Or do you want to, have it's high risk, high reward? So would you want to have the possibility of gaining 50% over the next 2 months investing in Brent? So these are things you got to think about. Depending on how much money you have to spend, you want to analyze your risk. But again, I want to thank everyone who is joining today. We're about at the 30-minute mark. I think that's good for the overview video. So drop it a like, drop a comment, subscribe. I hope to see more people in these live streams as we get going here. The YouTube page is growing, so I appreciate everyone who is on, watching, interacting. Hope you took some notes, because this ebook is going to come out next week, and it's going to be super cool to see who interacts with it. I want to see people put it to work, and I want to see results for people. That's why we're doing this. Why we build this stuff is because we want other people to use it and to be able to have success. So that's all I had today for you guys. I hope you guys reach out to me. Get ready, because I'm going to give this out to free to some people who reach out, get some early adopters on it, and get some results. And obviously, we're going to use that going forward to get more people to buy it and to more people working on their budgets and their expenses, keeping track of taxes and all that stuff. So that's all I had for you guys today. And I'll be back next week. Peace.